Hello friends, once again, welcome you back to my channel. Today we are going to continue with our video series of institutional trading in brackets SMC. You can check out my playlist, and then I'm here with another episode. We are going to proceed from where I ended. So I think those that are texting me to ask for more questions, but then let's proceed. So we started on this video series. I told you they're going to be kind of in order. They're going to be kind of in order. We started with consolidations and impulse moves. Basically, I talked about ranges and then these impulse moves. You get? So we believe, actually, I'm just making a quick recap about what we've been talking about. There are these ranges where the market is ranging, and then we see that there are these impulse moves. So we talked about that, and then we talked about the imbalance. These kind of moves, these kind of moves that happen in the market, whereby the market we are seeing, let's say, only buyers participating. We talked about that, and then we talked about these ranges that we are seeing over here. You get, and then at least by now we know the significance. Now, each episode that I bring, I'm building on to what I've talked about before, but all for purposes of learning. And then we talked about the fair value gaps. What I can say about fair value gaps are part of imbalance. You get, they are also a type of imbalance. You get, that happens in the market, fair value gaps. But then we are going to see. So time is coming when we shall be putting together these things. But as always say, for better clarity and explanations, I talk about more of this in mentorship. By the way, one more other thing why I'm doing these episodes, some of you were asking me for a demo for mentorship. Now this is like a demo. I'm showing you what I'm capable of, and then let's proceed. If you're keen enough to understand everything here, then it's okay. Then I talked of supply and demand in the last episode. So we basically I explained. It was just in the beginning. You get. I talked about supply and demand. Actually, the most recent episode I talked about order blocks, but then we are going to talk more about order blocks. Really, you get. We are going to talk more about order blocks, and then today we are going to get an example of how we get in. You get, of how we get in. And now today's episode is going to usher in something called the order flow. We are going to be talking about order blocks, and then given that I talked about them, we are going to be talking about how to refine them and some bit of order flow. You get, so that's what we are going to talk about. Then the next thing is that we use two examples. We use one example in Forex and another example in synthetic indices, because this channel caters for both. Though I'm hoping to open a separate channel where I'm only going to talk about Forex, you get, because some people get inconvenienced with synthetic indices, you get. So stay tuned. So we are going to start with gold, you get. We are going to start with gold. And then I'm on the chat, it's a live chat. And then I believe those who go on the chats right away, you'll find you'll be a testimony. You get, you'll testify to me, because I want to see the things that I'm going to talk about mostly affect the future. You get. So currently we're on the daily time frame. We are on the daily time frame. And then for the side of synthetic indices, we are going to use step index as the example. So now we can see the first thing that actually the basics of trading, if you they ever ask you about the basics of trading, uh, is to know where the price is heading. You get, that's basically it. You get, and that's why you're watching this video, for you to know, for you to be capable of determining where the price is going, where the market is going. So first of all, I told you you have to be a friend to the trend. You have to know where the trend is really going. You get, it's not good for us to be against the trend. You get, because we shall be in losses. So we can see that gold has been coming down. You get, it's been coming down. As we all know, that the market moves as it makes pullbacks, you get, but you never know where the pullback is going, and you may never know where it's going to end. But trust me, with proper learning, you'll know these things. Not that when you learn you don't lose, but at least you'll be being profitable doesn't mean that you don't make losses. Sometimes you make losses when you miss out certain confirmations. So basically that's it. Now uh, we can see there's something that I really want to caution you. Now, the daily time frame can really be tricky. You get, all these big time frames can be really tricky, but they're important. You get? Because basically what you're seeing here also happens on M1 or even on the seconds chart. You get? We see a market structure, but then we look at the relevance. You get? We look at the relevance of these things that are happening. You get? So basically on the daily time frame, we are not going to do much of zoning out. You get? We are not going to do much of we may zone out certain things. Let's say these breaks in structure. You get? Now for instance, actually I'm starting here. We broke a structure here. You get? We broke a structure here. You get? So one of the things that comes to our minds, by the way, you're going to find that most of these things are also touching on the side of psychology for those that are keen enough. And I've always been saying this. When we break a structure, it's one of the indicators or indications that the market is intending to proceed in that direction. But we know that we get what we call pullbacks or retracements. We come down and then we retrace a bit and then we come down like that. That's the movement of the market, you get? So basically, the market moves, these are going to be what we call swing structures. The market makes a swing structure like this. You get? Much as we have these moves that we're trying to go up, but then we consider this swing structure. You get? So the moment the market makes this swing structure, we may retrace back a little bit, but up to where? You get? Up to where? Now for the daily time frame, if you're going to be zoning out, let's say if you're on the daily time frame and then you're making these things, it's going to be really hard for you to find entries if you're making these kind of things, you get, on the daily time frame, unless otherwise, you get. If you're zoning out your entries like this, now for the market reach here, it may take like 2 weeks, you get, from let's say this point to this point, you get. So basically that's why sometimes order blocks are really important, because by the order blocks happen on almost on each and every time frame. So now today's episode, we are going to we want to see how we can zone out if at all we wanted to get in. If at all you by the way, most of us are day traders. We are even scalpers. We want to be in for like 5 hours and then we get out of the trade, you get. That's what I want to solve, you get. So on the daily time frame, it's going to be really tricky for you if you're zoning out your market like this. Much as you, it's good to zone it out, but then on the daily time frame, I'm not always looking at starting to draw these kind of things on the daily, you get. On the daily, it's not a very very good thing to me, and I'm going to be showing you why. You're going to be knowing why. So one of the things that I can look at here is that we broke structure here, and then we broke it with displacement. Now, I believe now you know displacement. Now, you can see that we broke it with an impulse move. You get one of the things that show us that we are intending to go that side. You get? So basically, when we break a structure, you get, when we break a structure. Now, I told you I used to say that the last opposite candle that happens before a break of market structure. So now we can look out for certain things, you get. But then that time when we broke structure, the opportunity was here for someone to look out for selling opportunities, you get, because we broke with displacement. The market proceeded down quite significantly. Now we know that it comes to our minds that we are maybe intending to proceed down, much as we could come and then we go up. If at all, by the way, maybe in later episodes, it would be a different case if at all for gold the market came and went above this point. You get? If it came and went above that point, it would be a different case. Then this would be a shift in market structure. You get? It would be a shift in market structure. But then, at least now we sold here. But then, even here, this is none of our business about what is really happening here. But at least what I want to bring out is that it helped us to find that the market reversed here. You get? So now, the moment we fail to take out these swing highs, you get? Now, I'm going to go on the point of order blocks. And remember, for those that watched the previous episode, know it that order blocks almost mean the same thing with supply and demand. You get? So the moment the market reverses, you get, the moment the market reverses and fails to take out this swing structure, if you took out this swing structure, then we would say that this is a break of structure, would call it like that. But the moment we failed, we come and just trade through this area here, and then we don't take it out, then when we fail to take out this high, then this one becomes a targeted high. You get? It becomes a targeted low. You get? Or this point becomes targeted. You get? It becomes targeted. Now, the moment the market reversed here, what is our what does it drive to our minds? Because I told you the first thing is for you to identify where the trend is going. You get? So which means this one becomes our target. You get? This is a point we are targeting to go and break. You get? That is our point that we're targeting to go and break. You get? But then this is the daily, and then I told you for the daily time frame, we may not wait for the market to come here and then we see what is going to happen. We may want to join on to the trend. You get? We may want to join onto the trend. Now, at least now, as of now, we know where the market is really heading. We broke structure here. We failed to take out this high, swing high, and then we are coming down. You get? And this point here is our take profit. You get? Take profit. Now, we are going to go on H. Now, the first thing, the thing that we do, we look at these candles. Now, there is some video I made in one of my early videos. I told you about the significance of these rejections or these candle wicks. You get? They mean a lot. You get? If at all the market is rejecting, it signifies something. It depends on where it's happening. You get? Now, I told you we are going to find that on lower time frames. Actually, first of all, when we see that the market is going with an imbalance, one of the things that comes to our minds is that the market it should reverse and covers up these gaps. You get? But then if the market was just moving and let's say it leaves an imbalance and then it comes to fill that imbalance and then it goes to fill the imbalance that it has left, then we shall be just consolidating like that, which we don't want. The market has to leave an area. You get? So if I told the market just came from this point to this point and then reversed here, you get? And then maybe it leaves imbalance and then it comes down, it wouldn't make a lot of sense. Besides, it would be easy for people to just join onto the trend and then they sell. You get? So that's like free money. We don't the market makers don't want that. You get? So now, one of the things we can see that the market tried to go sideways here, and then it's going to emphasize one of my points. You get? One of my theories that I shared with you, that one of the signs that the market is not willing to come, if at all the market was intending to come to fill up this imbalance, the moment we get a sideways consolidation, it's one of the indicators that the market is not willing to come back in that region very soon. You get? In that region very soon. So if at all we are not going to go back to fill up this imbalance very soon, what comes to our minds is that we should look for selling entries here. This is the target. You get? Besides, the market was reversing from this point to come to these areas. You get? So now, at least we've seen that. Now, what do we do? That's the first thing that you ask yourself. If at all you've analyzed, at least now you've gotten the bias. You get? We are get all those things that I'm talking about are helping us to get the bias. Everything that I've marked out here is helping us to get the bias. You get? Now, we've gotten the bias. Now, we are proceeding down. Now, this is what really happened last week. I want to show you how you would have gotten in on this move. This candle here is just of today. It's just of today. And then we are not worried. It's providing us with an opportunity for those who didn't join here to join and they sell. That's what I hope. You get? Now, we look out for a candle with a rejection. You get? With a rejection. Now, the same thing that happened here, you can see that this move that started, we got this rejection. Okay, the market at one point sold and then they rejected the downward part and then they came and bought. You get? Now, we look out for this candle, these candles with rejections. You get? But then we are going to be considering two candles to predict, let's say, the third candle. You get? So which means if you're on the daily, we use the past 2 days to predict the third day. You get? So we are going to use this candle and then this candle for us to determine this one here. You get? Let me even zoom in further. We use this one and this one to determine this one, or we can even use only this one to determine these two. You get? So now that's the thing. Now, what do? We highlight off. You get? We highlight off these candles like this. You get this candle. This actually, what am I doing? I'm doing this. We can see that these two candles, the rejection, this is the highest point. This candle has the highest point. You get this rejection, this candle week. This one is higher. You get, so which means we are going to highlight it. You get, we highlight off that region. You get, we highlight off that candle. You get, now when we highlight it off, when we highlight it off, we go on H4. We've highlighted both of these candles. You get, but then actually we are going to highlight the whole of this region. Let's highlight the whole of it, and then let me just leave it there. So now I'm going to go on H4. You get, I'm going to again H4. What am I doing? It is to refine the order, to get to this is what they call, is it order flow? You get, we are getting the order flow, the flow of orders. And now I'm starting to explain to you, actually I'm starting to show you how you identify order blocks and be part of the moves. You get, first of all, you've gotten the bias that we are coming down, but then we are getting these areas. So which means I talk, which means these consolidations, you get the consolidations, the first episode that we had, the consolidations are where we are going to be looking for order blocks most of the time. You get, now, which means each episode that I bring is going to be explaining more of this. You get, and the significance of these things, why I gave them to you. You get, why I gave them to you. So let's go to H4. Let me not waste a lot of time. Let's go to H4. Let's go to H4. And what do we see? Now, remember, remember, on these candles, the two candles that are highlighted, you get the two candles that I highlighted, the two candles that I highlighted, I only highlighted the candle wicks. But let me first go back to the daily and highlight of only two. Let me only highlight of two, because it will be much easier for me to emphasize a certain point. You get? It's only that okay. I didn't want to highlight this candle that was selling, but then I'll be able to explain that. So let's go to H4. Let's go to H4 and then I show you. So now, I only highlighted off two candles that I really wanted. You get? Now, you can see that on the daily, this is a rejection, because you can see we got an impulse move that was going up, you get, and then we got an impulse move that was coming down. What does it mean? If at all we get an impulse move that goes up and immediately we get another impulse move that comes down, it means this one forms a candle wick. You get, it forms a candle wick. The same thing that I told you that happens, the market moves up for a selling candle, it goes down, and then it closes like that. Now this thing forms the candle. That's how we get the candle wick. You get, this is the body, and then this is the wick. You get, so on the daily, this is the candle wick that was formed. You get, so all these things that happen, as they happen, they give you confidence, because you know what is really happening. You get to know what is really happening. Now, even on these candles, given that we are basing on two candles to determine the third, we want to be part of this move that came down here. You get, this impulse move that came down here, we want to be part of it. But all these two candles have already happened. But why did we highlight them off? Because we got rejections on them, or we got candle wicks on them, which means one of the signs that the market is intending to come down. Remember, on the daily, we know that this is our target. This is where we are heading. This is our target that we are heading to. You get? So now, what did we do? You get? Given that these candles have already happened, we can see that we highlight off still the candle, the rejection on the. Now for here, let me extend it further, and then I'm going to change the color. No. Okay, let me do this, I just wanted to change the feel. Let me get a better color. Oh, all these colors are not working well. Okay. Should I change? Let me change the opacity. Let me do blue. So this is what I wanted. You get? This is what I wanted. You'll forgive me if this video is long. You'll forgive me, but it's for purposes of clarity. You get? Because these are important things for us to get, for us to know. You get? So now, the market, we see that there is this candle wick. You get? Now, I told you, as we head in a given direction, you get? We expect pullbacks. But where are those pullbacks going to end? You get? Besides, I told you, I've told you that uh, I've told you that these consolidations is where we look for order blocks. You get? Is where we look for order blocks. You get? So if I tell you that in consolidation, consolidations are going to be helping us to look for order blocks, which means these consolidations are going to be key for us to find supply and demand zones. You get? For us to find supply and demand zones. Now it's like I'm touching from episode 1 to episode 5. You get? To episode 5. For those that have not watched them, sorry for you because I don't know. So now, which means the market moves from one pool of liquidity or from one pool of consolidation, you get, to another pool of consolidation, you get, and then at one moment it will come back to this pool. So which means these areas will become our areas of taking profit or our areas of looking for entries for us to let's say sell. You get? If I'm not elaborate enough, I talk about that in mentorship. You get? So now, at least we've seen that. You get? So now, as the market, as the market was trading here, because I told you as I was starting these episodes that we want to be part of we want to study the consolidations, you get, so that we be part of these impulse moves that happen. Remember in Forex, these sharp moves, this sharp move, it happens so quick. It happens so quickly. You get? It happens so quickly. Whereby, actually, let me first explain that. Why? These the market makers, as I always say, for them they don't come and then they just place order, they place pending orders. You get? For them, they have their orders seated in this region here. You get? Seated in that region over there. You get? They have their orders. So as the market comes and taps into that into this area, it will leave so quickly to come and shoot down. So you don't have enough time for you to be part of this move. So that's why I would encourage you get enough knowledge so that you know where you're going to get in. If at all they go against you, at least let it be a loss. Otherwise, sometimes it will be hard for you to get in on certain trends. You get to get in on certain trends. That's why I teach. By the way, for my videos, it's like I'm teaching. That's why I overemphasize certain things because I sometimes I'm not after just making a video. You get? I be like I'm talking to you directly. You forgive me uh, if at all I'm talking about things that you already know. But for me, I assume that sometimes someone is not knowing anything about these things. You get? That's what I assume. So now, this is explaining why, and I'm happy for those that have watched all these videos. This is going to show you, or it's going to help you for you as the market came and tapped here. So, which means for you, for those that already know, you had to place your pending orders in this region, actually, from this kind of body. You get from the body of this kind of, because you may miss out. So, which means this is this is the area, okay, which means above this area, if at all they came, uh, we calculate the distance, but then this is where you put your stop loss, which means if at all they came above this point and then they reached in these regions above, really, it means that the market is going up. You get? But then which means here for you as the market comes here and then it is spiking here like this, you get, for you already in the trade, and then it shoots down, you get, it shoots down, and then it hits now take profit levels. We shall be looking at take profit levels now. Given that we want the daily, the take profit level for H4 was, we look at these points, you get. So the market hits up, it hits down, you're already in profit. Actually, as of the last video, I was recording it, and on CTrader, I got a notification when my orders had filled, like they had hit take profit within just seconds. You get, the market moved so sharply here. You get, it moved so sharply here because I told you these are algorithms that are driving this market more so at these peak hours, these specific times. You get, so at least we've seen that. Now we've gone on H4. We can go on H1. You get, you're seeing how we are refining the order blocks. You get, because order blocks are going to be areas for you to get in. Now we are refining, actually from that we've refined of how we get in on consolidations. You get, now we can see on H1 still, uh actually H1 was kind of unnecessary. H4 had already given us the confirmation to entry in this zone here. This is where we'd get in. Let me even change the color. You get, so basically, we go to these small time frames to for clarity. You get, for clarity, but then you can see that this was a long sharp move that came from up to down. You get, and then TP1 got hit. You get, so for gold we are for now we are looking for confirmations to sell. You get, now I'm going to go on the side of synthetic indices, but now one more last thing about forex. Now you can see there is a lot that we really need to cover. You get, that's why I would encourage you to subscribe. Now for gold, you can see, yes, it is, that's what is happening, but there is something really important. These sharp moves happen in relation to time most of the time. You get, in relation to time. This is the move that I've been explaining. You get, this is the move that we had to catch, that I've been explaining, but it happened during a certain time. You get, it happened during London. You get, it happened during London. So these zones, these times as they come, we expect certain things. You get, we expect certain things. As I would always tell you that during Asian, this is the Asian session, you can see that there was something that was happening. You get, so as it matters a lot. That's what I wanted to say. So let me give the example of synthetic indices. I told you we are going to use a step index. So for step index, there is a lot we can do. Still, we on the daily time frame. You get, we on the daily time frame. We may want to know what is where is it heading on the daily. We want to get the bias. You get, so this is not the only way of getting the daily bias. You get, this is not the only way. So first of all, on the daily, first of what we can see is that we took out some kind of liquidity, but okay, we broke structure here. You get, we broke structure here. I told you on the daily time frame, it's going to really be a disservice to us to start zoning out like this. You get, I used to do it, but I realized that it's kind of unnecessary because this is the daily time frame. It may take so long for me to start zoning out like this. When will the market come to this place? I don't know. It's so long. You get, so basically on the daily time frame, we look for the bias. You get, so basically you can see that we broke structure here. We would be looking for areas where we can see that we got a consolidation here. First of all, now I told you we break this structure. This one becomes protected. This one here becomes targeted. You get, this one protected, targeted. So which means we don't expect the market to go above here. You get, above here, but then we expect the market to go below this point here. You get, so which means we look out for the areas where the market consolidated before it came down. You get, and you're going to find that in most cases these are the areas where the market turns again. You get, where the market turns again, but then at least we've seen that. So all of a sudden the market we got a shift No, the market reversed here, but at least I've explained that it's because this was a targeted area. This was targeted, and then this one is protected. You get. So now we've gotten the bias. Now we are proceeding down. No wonder, it's little wonder that we came, and the market reversed here. You get, it reversed there. So we went back up. Now I told you, because it's something we expect. Now, one of the things that we are targeting, given that even the market still moved up here, you get, it moved up. Now this was a reaction to a lower time frame supply zone. You get. That's why I talk about order flow. Now, order flow, there's a lot you study about order flow that you need to study. Now we can see, uh, sometimes things keep on popping in my head, and I feel I should talk about them. So still we can see that we are breaking structures as we come down. But this is the daily time frame. You get, this is the daily time frame. You get. Now, what would be one of our targets? Now we know, these are some of our targets. You get, these are some of our targets that you're seeing over here. You get, those are some of our targets, but more so this point down here. You get. So these are the areas of taking profit that we are aiming to hit. You get. So at least we've gotten the bias that we are proceeding down. First of all, we are seeing that we are breaking structures as we come down. So which means be careful as you're taking counter trends. You get. You have to be careful as you're taking buying entries. You get. You have to be so careful. Now we are going to do the same thing. We are going to highlight off. You get. We are going to highlight off. We are going to highlight off only the candle with the highest rejection. You get. So this is it. This is what we are going to do. We see that there is this candle here. You get. After all, we are in a bearish trend. You get. We are in a bearish trend. Now we see that we have this candle with a large rejection. You get, a rejection. Now we have another candle here that is having a rejection down. So this one, given that we're on the daily, this one becomes our first target because we are in a bearish market. Our bias is bearish. Now, that one, let me even highlight it. You get. That one becomes our target one, because after all, we know this is our targets down here, but we know the market will keep on moving like that. We don't know even when it will reach this point here. You get. So this one becomes one of our first target. You get. Now there is this point up here. You get. There is that point up here. We are doing the same thing that we did on gold. You get. And then when you go on Euro USD or volatility 75, it is the same thing that you're going to see. Now, this is one of the best ways to analyze order blocks, and the best way is to be part of the trend as it moves. You get. So now we are going to highlight of this rejection. Remember, I want to be part of this move. This is the kind of today as it's forming. You get. Want to be part of these moves that really happened. Now I'm going to highlight off. Where is the highlighter? Let me change this color to let me change it to what? I think this one is better. Let me come and highlight off here. You get. So I don't know whether it will be visible in the video, but then I've highlighted off the candle wick here. You get. So what do? We go on H4. You get. I go on H4 personally. You get. I go on H4. You get. This is a very, very good trick and technique. You get. A very, very good trick and technique. Now, I told you we are in a bearish market. This is the part where the market shot up and then it rejected. I've been explaining this, how these wicks are formed. You get. Now, the next step we do is to refine this area much better. You get. Then I'll come and I highlight it more. You get. You get. I'm highlighting the candle wick to the body. You get. The wick part to the body. You get. Now let me change this color to yes, to blue. You get. To blue. Now, what is the next thing that we do? You get? Remember, this is the target for us on the daily that you're seeing. This is the target that we've seen on the daily, our first target that we are aiming to hit. But then you can see that even H4 is providing us with another target that we can, let's say our first TP. Also, H4 can provide us with some good targets. You get some good targets. Now, what we do? We've highlighted. You can even see that the moment on H4, the moment the market tapped into this, you get. Now, for me, if the market went above these points, at least that is a good point for you to count that a loss. You get? That's a good reason. But then you're going to find that in most cases, you're selling. So here you can place pending orders. It's going to help you to place pending orders. But then the good thing about synthetic indices is that for them they don't move so rapidly. You get? They don't move so rapidly like forex. You get? So let's go to H1 and maybe we'll find that area much better. You get? Now, for you, if you've seen order blocks elsewhere and they are confusing you, order blocks are helping us to get in. Now, if at all you know how to get in, then you'll find that order blocks most of the time are history. You get? So you can see that this is H1. This is H1. You can see that the moment the market tapped into that, into this area, it rejected and then it came down. You get? So which means for you place your pending order just here and then the market sells as you are part of that. You get? Our H4 target is here. No, this is H4 target. This is the daily target. You get? So as the market reaches here, we expect a reaction where it will move into inside this part and then it will come down. You get? It will move inside this part and then it will come down. You get? So now for you, you sell. Here it's returning. Let's go to M15 and then you're going to see this area. Today it's been reacting to just a minor supply area. If you didn't be if you were not part of this move, so that you could be part of this one, you get, so that you could be part of this one. This is M15. You get, this is M15. It was just reacting off of this zone here. You get, so the moment it tapped into it, remember, we got confirmations yesterday that the market tapped into this and then it was selling. Here, these are, if you didn't join in, you just sell. You get, you just sell. It's just consolidating here, it will move down. You get, but at least nonetheless, it provided us with an opportunity to sell to this point. You get, so I believe this strategy really works. And then you're going to find that you're going to be part of the order blocks. You get? You're going to be part of the order blocks. There's no better of being part of the order blocks. Remember, if at all we were considering the last opposite candle before a bearish run, let's say for a bearish order block, then we would be considering for the market to return to this point. But then, at least now, this would be history. You get? This would be history. But then here will be part of this move that is coming down. You get? So as of yesterday, if you wanted to buy, and the market is reversing here, you get, you're going, if you know that you're going to sell at this point, it means you can buy from this point to this point. You get? So you can take double moves from this point to this point and from this point to down. You get, to down. You get? So basically that's what I wanted to bring out. So I encourage you to please subscribe to this channel, share the video. You can still join my mentorship program for those who wish, by the way, and do a lot of practice. Do a lot of practice because these things could be too much. So you wait for the next episode. I wish you the best in trading.